Hi students, we're jumping right into Chapter 3. An issue arises when revenues or expenses apply to more than one accounting period, and the issue is resolved by making adjusting entries at the end of the period. These adjusting entries allocate to the current period the revenues and expenses that apply to that period, deferring the remainder of that to future periods. A deferral is the postponement of the recognition of expenses already paid or of revenue already received in advance. An accrual is the recognition of an expense or a revenue that has arisen but has not yet been recorded. Adjusting entries are required to accomplish the following tasks: to allocate recorded costs, such as the cost of machinery or prepaid rent, between two or more accounting periods; to recognize the incurred but unrecorded expense, such as wages earned by employees after the last day in accounting period; and then 3, to allocate recorded and unearned revenues, such as cash received for services that are yet to be rendered between two or more accounting periods; and to recognize unrecorded, unearned revenues, such as fees earned by not yet billed customers. So, when an expenditure is made that will benefit more than just the current period, the initial debit is usually made to an asset account instead of to an expense account. Then, at the end of the accounting period, the amount that has been used up or that has expired is transferred from the asset account to an expense account by means of an adjusting entry. Let's talk about prepaid rent for a moment. The prepaid rent and prepaid insurance accounts are debited when rent and insurance, respectively, are paid in advance. Office supplies account. The office supplies account is debited when office supplies are purchased. Then at the end of the accounting period, an inventory of office supplies is taken, and the difference between office supplies during that period and ending inventory represents the amount consumed during the period. Long-term assets, such as machinery, buildings, equipment, or company vehicles, are debited to an asset account when they're purchased. And at the end of each accounting period, an adjusting entry must be made to transfer a portion of the original cost of each of those long-term assets to an expense account. All right? And the amount transferred or allocated is called depreciation. So that's another example of an adjusting entry. The accumulated depreciation account is called a contra account because it appears on the balance sheet as a deduction from its associated asset account. Proper balance sheet presentation will disclose the original cost, the accumulated depreciation as of the balance sheet date, and the third thing is it'll show the underappreciated balance. It's called the carrying value. There's a question about the carrying value in your upcoming discussion question. I think it's discussion question number 1. In the adjusting entry to record depreciation, depreciation expense is debited and accumulated depreciation is credited. Okay, when revenues have been earned for which no payment has been received, adjusting entries must be made to record these accrued or unrecorded revenues. For example, if interest that has been earned, like on a savings account, has not been received until the next period, a debit must be made to the interest receivable, and then the credit must be made to an interest income. Okay, you can read about all this in Chapter 3 and read up on that, and it's in Section 3 to understand the details of those accounts. And don't forget, the script for the video that you're watching right now is included in this module just below the video, clip in the module. So it may help you to better understand the adjusting entry concepts that I've been reviewing. All right, as usual, I'll be available during virtual office hours on Tuesday evening. Contact me with questions. Look me up at a different time throughout the week if you need to get a hold of me. Remember, God is on his throne. He's always been there, and he's always going to be. Have a great week.